What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. Um, Now, first things first, I would like to apologize for my 2 weeks of absence here lately, okay? But to be honest with you, I just needed a little bit of time to, rest and relax. I have to protect that mental capital, you know what I'm saying? But I wanted to tell you all how much I appreciate you still being here, still supporting the channel in my absence. And a special thank you to those of you in the Discord channel, keeping the place alive while I was gone and helping each other out on a daily basis. That's a beautiful thing to see, bro. When people come together to accomplish a common goal, you know what I mean? We're making the dream come true together. And that's what this is all about for me. All right. So today is Friday, and I wanted to go over with you a few pairs from my watch list, okay, and talk about it a little bit. Um, Now, I took two trades today. I took a small position, a short position on the DJ30, and I sized in to a short position on the NASDAQ, okay? But we're not really going to go over those. We're going to look at the NAS trade, of course, okay? But we're going to look at some other things too. We're going to be mainly looking at pump and dump type of trades, but we're going to look at one dump and pump type of trade. All right. Now, one of the most important questions that you can ask yourself, or that you will be asked by Stacy, right, is what setup are you hunting? Now, when traders hear this question, they often try to complicate the answer, right? But simplicity is key here. So keep it simple. What setup are you hunting? Right? There's only two types of setups. Okay, buy low and sell high. Right. So what setup are you hunting? There's only two types of trades: pump and dump, or dump and pump. Which one are you hunting? Okay. For me, I am naturally short biased, meaning my brain and my eyes see short opportunities just a little bit easier than long opportunities. Right? I like to sell shit, is what I'm saying. And those opportunities just sort of stick out to me. They jump right off the screens. Okay. They're a lot easier for me to see than the buying opportunities. All right. So for that reason, that's what I'm looking for. It doesn't matter what day it is. It doesn't matter what session it is. I'm looking for the exact same trade every single day. Okay. Now, before we look at the charts, I just want to go over with you once again this master pattern template that we commonly have spoken about on this channel. All right. And what I want you to remember as we go over this is that this is not, you know, how we enter the market, or something like that. Instead, this is a way of seeing the market. Okay, it's a frame of reference. It's a way to interpret the market structure that is presented to you on your charts. All right, that's really what it is. This simple master pattern template contains all of the information that you're going to need. All right, and I know that that sounds like I'm exaggerating, but I'm really not. Okay, it's that simple. This little image has everything in it that you're going to need to know, really. All right. Now, we have 3 steps for this. And of course, here we're looking at a pump and dump template. All right. Now, you can see I have listed the 3 steps for you. Okay. Step 1, we're looking for a peak formation low. That peak formation low is our anchor point. Okay. That's where our pump up begins. All right. So that's our anchor point. That anchor is also our target for the dump on the backside of the move. Okay. Now, when we put in that peak formation low and the market is pumping up, that's what we call the front side of the move. Right. And while we're on the front side of a pump and dump template, we are looking for dump, and pump scenarios in the session that we are trading, right? So step one is a peak formation low. Step two is a peak formation high, okay? And step three is lower lows on the inside, all right? Once we have those lower lows on the inside, that is potentially now alerting us to the fact that we may be going or shifting from front side of this move to the back side of this move. On the front side, we're putting in higher highs, okay? On the back side, we're putting in lower lows. And while we're putting in lower lows, we are looking for pump and dump scenarios in the session that we are trading, okay? So, using this information, we are able to uh, look at our charts and see where we are inside of this master pattern. And that allows us to know what type of trades we're looking for, whether we're looking for dump and pump or pump and dump. Now, personally, I like trading the pump and dump scenario. So I'm going to be trading the backside of the move the majority of the time. All right. Also, I am sitting out Monday and Tuesday and only looking at my screens Wednesday, Thursday, and Friday, which is the backside of the week. So I'm trading the backside of the week and the backside of the move. All right. Now let's see this master pattern template in action. All right. So here we're looking at the NAS chart. And you can see Monday, Tuesday, we are pumping up. Monday gives us our peak formation low. Okay. Tuesday gives us our peak formation high. All right. And we really don't have the lower lows on the inside until Thursday's Tokyo session, right? Thursday's Tokyo session breaks Wednesday's low. All right. So we have gone from the front side of this move now potentially to the back side of this move. And if we're on the back side of this move, putting in lower lows, then we are looking for pump and dump scenarios in the session that we are trading. All right. You can see on Thursday, we have a beautiful pump and dump opportunity. And again, here on Friday, another nice pump and dump opportunity. Okay. Now, here's a close up look at the trade I took today on the NASDAQ. Now, what I want you to see here is this peak formation low. Right? That is where this market starts to pump up, and we pump up headed into the New York session. By the time we come to the New York session, we have put in a new high of the current day level. All right, we've broken the Tokyo highs, and now we are at the high of the current day. This is the high of the current day, all right? And we know that we only enter the market from three levels, okay? The high of the day, the low of the day, or the previous day's closing price. Now, Stacy is not telling us to try to get in all the way up here at the high of the day, right? The high of the day level, okay, is a level, meaning it's not a specific price point. It's more like an area or a zone. So we are trying to enter this market from the high of day area, from the high of the day zone. Okay. We just want to be entering this market coming off of that level. All right. Now you can see here, we pump up right at the open. Okay. And then engulf to the downside. Then we have this 3-bar stop hunt pattern back into the high of the day level. And then a 5-minute bearish engulfing candle, all right, that closes convincingly below the 20 period exponential moving average, which is our universal entry criteria. Okay. That's where I entered this market. My stop loss went at those structural highs of the pullback. And originally I was targeting this anchor point right here, okay? But I closed here as soon as we started getting this candle going up. Now, the reason why I decided to close this trade early, okay, is because at this point, like I said, I sized in. I was up 23%, okay, of my whole account balance. This one trade locked in 23% gains, right? So for that reason, once I'm past 15 or 20%, I'm totally fine with shutting the trade down wherever we're at, right? Now I could have shut down, 75 or 80% of this trade and let the rest run, but I didn't. I just took it all. I didn't want to give anything back. And like I said, I also at the same time had a small position running on the DJ 30, which got me another, couple percent gain. So all in all, we closed Friday with a 25% gain. And these were the only two trades I took this week. Okay. So I took two trades and locked in a 25% gain. But really, it all came from this NASDAQ trade. Like I said, 23%. That's the power of patience. Okay. Patience pays. And it pays to know what setup you're hunting. Okay. Because being specific with the types of trades I'm taking, right? I'm looking specifically for pump and dump scenarios, right? So I was able to sit back and be patient and just let my setup pop up on the screen when it was obvious to me. I took the trade and, here we are. With this slide, I'm just trying to show you on the backside, right? We're in a downtrend on the backside. Okay. We're in an uptrend on the front side of the move and a downtrend on the backside of the move. Now, when we're in a downtrend, right? A downtrend is characterized by lower lows and lower highs. The lower lows of a downtrend are considered weak lows because those are broken as we continue to put in lower lows. And the lower highs in a downtrend are considered strong highs because those highs should remain intact as long as we are trending down. All right. And you can see that this high of Wednesday remains intact. This high from Thursday remains intact, right? And we're expecting the market to pull back into the previous day's range before continuing lower. Okay, just like over here, we are pulling back into the previous day's range before continuing lower. Okay. Now, another thing I want to point out to you, and Stacy says this sometimes, right? Signal on the day. When we have in the Tokyo session, for example, on Thursday, right, we break the low of Wednesday. That's a lower low. Okay. That's our signal on the day. That sort of tells us that the market may want to continue going lower. All right. And the same is true here. Once we put in this lower low in Tokyo, this lower low in London, that's letting us know, alerting us to the possibility, right, that this market wants to continue lower. That's our signal on the day. Okay. Lower lows. While lower lows are being put in place, we are looking for pump and dump scenarios in our session. Okay. Now here's the gold chart. You see it looks very similar to the NASDAQ chart, but a little bit cleaner as far as the pump and dump template is concerned, okay? But it's the same deal. We have Monday and Tuesday that go higher. Wednesday gives us our first red day, right? But Thursday in the Tokyo session is what breaks Wednesday's low. That's our lower low on the inside, which sort of confirms for us that we are now on the backside of this move. And while we're on the backside, we're looking for pump and dump type of trades in our session. You can see on Thursday, we get a very nice pump and dump trade. And then again here on Friday, okay, we get a very nice pump and dump trade in our session. And if we look a little closer, you can see a micro master pattern template in full effect here on the gold chart on Friday. You can see we have our peak formation low, step one, peak formation high, step two, lower lows on the inside, step three. Then this market pumps up. This is after 9:30 in the morning, pumps up and then dumps, goes straight down to that anchor point. Okay. There would be your potential entry into this market, stop loss, target, all that good stuff, right? Here we're looking at the Euro USD currency pair, okay? And again, we have this micro master pattern template in full effect on the day, okay? In the session that you're trading, we have a peak formation low, peak formation high, lower lows on the inside, Now we're potentially on the backside of this move. You can see this market pumps up one final time back into that high to the left, okay, back into that peak formation high here, right, before melting and going straight down to that anchor point where the pump began, right? And this is the last slide we're going to look at. And you can see it's a little bit different. It's still a good chart. That's why I wanted to show it to you. So this is not a pump and dump. Okay, this is a dump and pump type of trade, right? And you can see, again, we have a higher high, a signal on the day. Friday has broken Thursday's high. Okay, Thursday's high is like right here. So we break out, right? That's our higher high. That's a signal letting us know that the market may still want to continue putting in higher highs, right? Now, we're still using the master pattern, but it's flipped for the dump and pump, okay? Now, instead of starting with a peak formation low, we are starting with a peak formation high, then a peak formation low, then higher highs on the inside. We pull back one more time before heading straight back to that anchor point of the dump and then beyond. You can see I'm using the customized Fibonacci tool and turned it into a range expansion measurement type of tool. And you can see we have two full range expansions as a potential target on this market, okay? And the reason why I pulled this tool out is because we do not have very clear and recent targets to the left to go off of. All right. So this is a very useful tool to have in your kit. You know what I'm saying? But still, a very nice trade. Now remember, the market only does three things, right? Breakout, pullback, continue, breakout, pullback, reverse, or breakout, pullback, and enter a trading range. And this is a perfect example of a breakout, pullback, and continuation type of trade. Okay. Remember, this is the high of Thursday. So we break out, pull back on top of that level, right? Before continuing, right? Breakout, pullback, continuation. All right, so I hope that that makes sense. Now, I appreciate y'all again for being here, for staying active on the channel and in the Discord. All right, I really do appreciate you. It means a lot to me, man. But until next time, I hope you continue to free your mind.